One of the key surprises so far this year has been the resilience of the labor market. So the pace of job gains has exceeded our expectations for sure. Coming into this year, we had expected the trend of slowing job growth to continue, and it hasn't. It's sort of leveled off, and the economy has generated roughly 300,000 jobs per month this year. That's been a significant surprise to the upside. Certainly, by this point in the cycle, we would have expected to see some more slowing in general in the pace of job gains, and it just hasn't occurred. And that's probably because, well, it's because of two factors. The labor market, like any market, has two sides. There's supply and there's demand. These two sides are not independent of each other. So supply had been significantly restrained through the first part of the post-pandemic recovery, and that persisted for some time. We've more recently seen a recovery in the labor force, but still that scarring of being unable to hire and retain employees in that immediate post-pandemic period has led to a more aggressive bid for those employees more recently. Something that's often referred to as labor hoarding. And it does seem to be contributing to the excess demand for labor that's persisted in excess of our expectations coming into this year. So that's been a significant upside surprise, is the resilient demand for labor. And we do believe that hoarding mentality is a contributing factor. So how has this changed our view of the cycle? So it really hasn't changed our view of the cycle. What we're thinking about, we're still thinking that we're a very late cycle, very late in the process, very late in the expansion. Downturn is still something that we want to be positioning for and prepared for. But what it may mean is that the eventual downturn may be a little more mild and moderate than we'd previously expected. A hallmark of a deep downturn is a large loss of employment and incomes related to that. So if we don't get that in this cycle, which would be a very good thing for the economy, the downturn will be less severe, and therefore the opportunities presented in the marketplace may not be akin to what we'd expect or what we would anticipate in a traditional downturn.